Good morning, everybody. We're going to go ahead and get our next session started. So I'd like to introduce Rob Mao, partner at Oliver Wyman, to talk a little bit about the Uberization of business payments. So, Rob?
Great, thanks. So today we're joined by a couple of gentlemen with a long history of payments experience. First, I'll say I got some feedback that we have one of the coolest titles. So apparently, if you just take a company and make it a verb, that's like a cool title. So Uberization. I want to try to work my company's name into that, the Oliver Wymerization of payments, but it just sounded like a dog breed, so that doesn't work. So everybody's day-to-day life seems to be changed by the Uberization of payments, where the payment disappears, the experience is better, there's a digital experience that blends with a physical experience, and it's very true and easy to see on the consumer side of things, but it's a lot more difficult to see in a B2B context. And the B2B context is remarkably more complex and difficult to solve than the consumer experience. So fortunately today we're joined by a couple of pioneers in this space. Between the two of them, nearly 50 years of payments experience. So we have Scott Galit from Payoneer. He also has formed other startups before, SoulSpark, and has worked with at MasterCard and First Data. And Rene Lacerte with Bill.com, who also has worked at Inuit and has another startup that he started a while back called PayCycle. So gentlemen, welcome.
Thank you. Thank you.
So we'll start with a nice softball question here around, so the Uberization of B2B payments, what does that mean for each of you?
Yeah, I mean, you just started to touch on one piece of it in your intro, which is how, kind of thinking about how Mark Andreessen talks about how software is eating the world. Software now is used across really almost every aspect of business. And payments in the B2B context are typically a pretty small part of a much broader and bigger workflow. As those workflows become more digitalized, the payments actually become integrated, embedded, and invisible as part of the way those B2B software systems are used to manage payments. We also tend to think about another aspect as well of the Uberization of payments, which is actually more related to the Uberization of commerce. Which is how fundamentally Uber represents kind of a whole new class of new types of business models where you have digital platforms that are actually the new matchmakers of buyers and sellers. And as a result, there's whole new business payment flows and whole new business payment needs that come along with those new types of business models.
Yeah, I think an award for me, simplicity, right? When you think about ordering up an Uber, it's a hell of a lot easier than hailing a taxi or calling anybody else. It's there, it comes. It may not be exactly what you want in the right time, but it's going to be there and it's simple. And so when I think about consumer payments, whether it's card or ACH or consumer bill payment, all things that I've worked on, that's all fairly simple. It's a much simpler process to pay, a simpler process to think about. And business payments are really complex. And it's that complexity that's been really hard to simplify into an experience that's the equivalent of a consumer experience. And that's what we've worked on so hard to kind of make it something that we can simplify the experience so people can actually pay their bills from anywhere in the world and manage the contracts and invoice their customers from anywhere. And that's the Uberization, is people want to be able to do something when they want to do it and they don't want to have to wait. And that's, I think, why we chose, or why we like the title of this session, is because it's that instantaneous need that we all have in business, and yet there aren't people building business solutions except for a few of us.
So B2B has a reputation for being slower moving than consumer payments. Is that a fair reputation? Do you see trends changing in that space?
I would say that, like you mentioned, I've been in payments now for close to 25 years. I would say that the B2B payments has been the hardest to solve. And I didn't understand that when I first got into payments. I didn't understand that until I started my first company. And I'd grown up, my parents and grandparents had lots of businesses, probably close to 10 between the two of them. And so I'd grown up understanding, how do you manage your cash flow and stuff like that. And I didn't really understand it, though, until I started my first business. And so when I started the first business, I'm sitting there trying to stretch out the payables and pull in the receivables, and it was really complex. And how I made decisions was complex. I didn't know if I wanted to look at a contract or talk to an employee or talk to the vendor or maybe ask the customer why they haven't paid. I didn't know what I wanted to do when I was managing cash flow. That complexity is slowed business payments down, in my opinion. And then you throw in cross-border payments, and Scott can talk about that, but double the complexity, right? There's just a lot of challenges that need to be solved. And the good thing about, Andreessen's comment, software is eating the world. We are able to solve these problems with software, and that's what's actually changing the game. It just takes time, right?
I think to build on what Rene said, right? So in the consumer space, when you go make a purchase, you want to buy something, you go decide what you want to buy, you then pay for it, and basically you're done. In a business environment, you actually, the person in many business contexts, and leaving aside very small businesses where the owner may be the decision maker, maybe the buyer, maybe the CFO, and dealing with everything, but the person that actually makes a purchase decision probably needs some approvals. The person that makes that purchase decision probably isn't the party that's actually making the payment. There's a whole variety of different processes, authorizations, and systems that are involved. And so all of those things actually create friction around innovation, because it's not just solving for a payment, it's actually solving for the broader context. And again, that's part of what's been so interesting for us, is we've tended to spend a little bit more time focusing on new types of business models. And so when you think about a business that's actually trying to participate in the digital economy, and as they're actually now entering this kind of lower friction environment, they really have a whole new set of needs and a whole new set of challenges. And as a result, we've seen tremendous room to actually innovate, and innovate at the same pace that actually consumer innovation. So imagine being able to make a VAT payment by a click of a mouse from anywhere in the world, or being able to actually have your ERP system order new bank accounts in any country and any currency that you're actually operating in around the world. There's a whole variety of different tools that we've been able to create and introduce for our customers that helps them do business at the speed that digital business is being done today.
So maybe some advice for other fintech people as well. So you're both very successful, I would say, in the fintech space. When you look at trying to be a disruptor or trying to grow in a fintech environment, what do you think are the two most important traits or lessons learned that you can provide?
I think first and foremost, remember that you're in the trust business. And so everything that revolves around trust, regulation, compliance, data protection, cybersecurity, I mean, these are non-negotiable. And when you're selling to businesses and working with businesses, it's just the table stakes. The second is really try to think about what problem are you solving. And so we've seen over and over again companies that come out with interesting ideas that offer some kind of incremental benefit, but it's more technology in search of a problem. And I think fundamentally when we see the amount of pragmatism that has to actually come into play in the business world, everybody's busy, everybody has choices they're making about how they're going to spend their time and their resources. And if you aren't actually helping solve a real problem, you're going to face a tremendous uphill battle.
Yeah. I think the trust thing's an interesting one, because when we do surveys around trust, and you ask the question like, do you trust your bank? And resoundingly the answer is no, and has been on a decline for a while, although it's started to tick back up a little bit. But if you change the question and ask, who do you trust with your money or your payment, and you stick like big tech companies next to banks and next to retailers, what you find is, oh my goodness, the bank ends up kind of back on top, right? So there's this like dichotomy around trust, and I think you bring out an important point is, if you don't have it in the system, you're nowhere.
Yeah, I think the first thing I would say for any entrepreneur, it's patience and persistence, right? I mean, this company's 12 years old, and it takes a long time, especially in the payment space, because people don't give out, because of the trust issue, they don't give out their bank accounts necessarily easily or use you to manage all their payments just at the first go. That said, we have over 3 million entities in our network that have given us their bank accounts. So people are willing to trust us with that rather easily. But I think specific to kind of the fintech, the payment spaces, do not underestimate the value of understanding the regulatory and compliance needs, and do not underinvest in risk. Because yes, you need to build the trust, but then it's your job, it's our job to actually make sure that these are people that we can trust. And that's all the risk and the compliance and the regulatory. And a lot of times people say, no, I don't want to have to deal with that. I'll just get somebody else to outsource that to. And the reality is, if you don't do it, you're not doing your customers a service. You're not understanding their business well enough to be able to be at scale. And so that's what we focus on, is making sure that, hey, that we understand the regulatory environment, that we understand the risk, and that we're able to kind of address and focus on that as part of the overall equation for our customers.
So Rene, you sit in the middle of billers and banks and consumers and stuff. And in my experience, when you go talk to a commercial banker, it's really tough to push innovation, right? So they're asking the questions of, well, how much is it going to cost me? Can I create revenue? Like, how do you change that conversation that you have with large commercial banks?
Well, the first thing I do is I show them my socks. Last year's Money2020 speaker gag. So, and that tells them that I'm actually...
I thought that was going to be one of the two keys to success, was make sure you show your speaker socks.
Thank you, the folks at Money2020. They're fun. No, seriously, I think the first thing you do is you talk about the problem, kind of the thing that Scott was saying. You don't go in and say, hey, we just want to sell you something. It's like, this is the problem that our customers have, that we know your customers have. And we're able to do that in a way because we're now at enough scale and have been for a couple of years. A couple of years ago, we would have gone in saying, okay, name a bank, top 10 bank, top 20 bank. We have, 1,000, we have 5,000 customers on our platform that are using their primary bank account at your bank through us to pay all their bills out to everybody that they do business with and to collect all the money from all their customers. And, we say, go talk to them. They're happy, they're satisfied with us, but you know that. You just have to go look at, your ACH records, and you can see where Bill.com pops up. You don't even need us to do it. Go do the work, and they do the work, and they go in, and they talk to the customers, and they find out, one, the customers are happy, but then two, if they have any analytics department, they start drilling in on the data, and they see that the retention on these customers is higher, that the usage the customers have is higher, that they add more products and services. And so how do we make banks actually kind of get involved and understand? Because the holy grail of business payments is actually getting it electronic. All of us who've been working in payments have said, why did consumers happen so quickly, and why are businesses taking so long? And so the fact that we have adoption, our customers start at 5% electronic payments in the first month, and within a year they're at 70%. So you show them data like that, and that opens the door for them to say, oh, well, maybe it's the problem. We weren't addressing the right problem. If we address the right problem, then we can actually have the solution that we have already built, right? So I think the focus has been just showing them the problem and the customer engagement and talking about what you can do for your customers when you have a platform that does what we do.
Yeah, that's great. Thanks.
Thank you.
So, Scott, you're in the cross-border payment space. It seems to me that when an investment company comes together, or a PE firm, or a foreign bank, they sit and look at payments, and they run across this great insight of, wow, cross-border payments, fat revenue margins, and they all want to get in this business, but very few actually successfully do. So, maybe what's a little bit of your secret sauce in the space, or what are you doing that others aren't doing, and how are you protecting that space as you play there?
Yeah. I think fundamentally it's because we didn't wake up one day and say, let's actually go do cross-border payments and let's get into the cross-border payment space. We woke up one day and said, wow, technology is really changing how the world works in very fundamental ways, and it's really transforming how commerce happens all over the world. And we saw these kind of 4 mega trends that we really looked at. And again, going back to Rene's point, we're a 13-year-old company, and so it takes time for some of these things to really mature. But these 4 megatrends that we saw 13 years ago was, technology makes borders come down. The friction that stands in the way of people and businesses around the world communicating, interacting, and transacting are all eroding, and eroding very quickly. A second, and kind of related to that, is technology now makes kind of the entire world exist on a single technical operating system, right? So it's kind of like the whole business world now is able to operate using kind of this meta layer that sits on top of whatever local systems, processes, or environments they had in their local markets. And so what we see is then the developed world and the developing world come closer together. The West and the East come closer together. And again, the whole world is now operating in this kind of lower friction environment. A third mega trend that we saw was the gap between talent end market was shrinking and actually kind of going away. And now, not only doesn't it matter where you are in the world, it doesn't matter how small you are. You can be a sole proprietor, an entrepreneur, a small business owner sitting in some far-flung country around the world, and all of a sudden there's an entire world of opportunity available to you to build and grow a global business. And part of that, and going back to the Uberization, kind of this fourth megatrend that we saw, was the emergence of these natively digital platforms that kind of redraw the global supply chain, kind of the new matchmakers of buyers and sellers in the digital economy. And so we looked at all of these big trends and we saw how they were reshaping kind of the future of commerce, reshaping the opportunities for businesses of all sizes all over the world to participate in the global economy. And we said, so what do those businesses need in order to succeed? What are the tools you need as either an SME in a developing market or a digital platform or any business, any entrepreneur anywhere in the world? And so that's how we've kind of relentlessly focused our efforts, is actually how to help them succeed. And along the way, it just so happens that we built a digital, global, interconnected platform that actually makes cross-border payments as easy as local payments.
I think something I would add to that is, this changed everything. We all know that. Did we ever step back and think about it? But there's a symbiotic relation between the phone and the cloud. You just think about the evolution of both. They kind of both happened in the mid-2000s, right? We had the internet before the cloud, right? But just that symbiotic relationship about what you can do with data and user experience and how you can customize it changes, and the Uberization of everything, if you will. Absolutely. And people in whatever country, they want to be able to get paid, and they want to be able to pay people, and that's just changed things. And I don't think you can. I think it's been underestimated the influence that's going to have on commerce, and it's just going to keep rolling. It's going to be getting faster, in my opinion.
Absolutely.
So we've gotten a few good questions from the audience, and if you have more questions, submit them through the app. I'll throw one at you. Thoughts on how a centralized B2B directory could improve payments?
So, I think one of the things, and this is another one of the holy grails that everybody would love to have, is kind of one directory, one network. And I think, that is possible in the future. Things are changing so fast, it would be hard to actually pin down exactly what the network needed to be. So, we have a network of entities that we pay and get paid through us. And, there are other companies that do. And right now it's just moving so fast. So I would say the hard thing is if we knew enough to actually lock it down, then maybe that would be the right time to do it. But right now, there's so many different components coming in, it doesn't feel right to me. I don't know if, Scott, you have...
Yeah, I think there's a big difference between the theory and the practice on that, right? So in theory, if you had a centralized global directory where every party that's engaging in commerce was in the directory and you could basically just pay any of them or get paid by any of them instantly, again, sounds fantastic. In practice, I would certainly be quite reluctant to have my company's information sitting in the cloud somewhere, that was going to be accessible by all other parties all over the world and all these other contexts. So I think the practicalities of getting from here to there, I think, are actually pretty challenging.
Yeah, and we see people who own that directory protecting that directory, and naturally so. It becomes kind of a viable piece of your business assets that's difficult to share. So there's an interesting question about Uber drivers and paying Uber drivers. I'm going to actually expand this question a little bit and say the face in which people work, and whether you're a full-time employee or a contract employee, is all changing as the gig economy continues to grow. And I think this is a good question both for cross-border as well as just B2B payments. So now there's just like a Band-Aid around. We're going to go from payroll to a prepaid card, and if you want to get paid right away, you can pay a little bit of money and get that deposited fast. Is that a good long-term solution? Do you see changes in how this goes? And then how does the cross-border component play with kind of a new economy around globalization?
I think ultimately, when I've had this conversation with folks, I think the certainty of payment is more important oftentimes than the speed of payment. That's not exactly true with a driver that's only doing 1 or 2 drives a day, and that's how they're going to be able to, put food on the table. And so the thing that comes to mind as you ask the question is, we all know the stories about, the people that don't have bank accounts, that when they go to get their checks cashed, there's a 20% surcharge that's going to the person who's cashing the check. And it's like, that doesn't feel good, because these are the disadvantaged individuals that don't have a lot of income. And so for them to have to, pay a lot to actually get their their payment doesn't feel great. Now, I think debit cards actually aren't that expensive. Definitely not in that 20% range, or probably more in the 1% to 2%. So I think it's something that is as you look to the economy becoming more driven by individuals that are just doing odd jobs here and there, I think it's going to be necessary to kind of accelerate payments for them.
Yeah. Here's a load. Oh, I'm sorry.
No, I mean, I was just going to kind of with a little bit of maybe an international angle to it. Again, Uberization, businesses like Uber and Grab and others in Southeast Asia, these drivers are actually driving around and they need to buy the gas and things like that. So the entire business model is predicated on them being able to get the payments essentially in real time. I think we are seeing, though, here in the U.S., and I think we'll see in other markets, if you've earned money in some way, having immediate access to those funds on demand, again, technology makes that much more possible, much lower cost. And I think we see a lot of companies, in large part because of what Rene was talking about, they don't like the fact that their employees are going and having to find high-cost alternatives to some of the payroll cycles that are probably more a legacy of an analog world as opposed to taking advantage of things the way they work today digitally. So I think there will continue to be more of a trend in that direction.
Square Cash is a good example, right?
So, yeah, absolutely. This is a great question, and it's phrased in terms of when banks considering partnering with a fintech, but let's make this broader and say when anybody is talking with or considering partnering with a fintech, what questions should they be asking them? And when we'll expand it a little bit and say, what areas should they be giving up authority or like the connection to the customer, and where should they be thinking about retaining these things?
I'll jump in. Again, first, going back to trust, all those basics are mission critical. And again, I think too often in fintech, and it's changing, but too often in fintech, we find that the emphasis on the tech as opposed to actually more on the traditional financial services side. And I think Rene's built a business, and we've tried to build a business where we've really tried to marry together the regulation compliance on one side and being technology innovators on the other, and kind of keep those kind of joined at the hip as we build the business. I think anybody that doesn't focus on that, cybersecurity, data protection, I think is just not doing their job. I think along with that, I think you have to find out whether interests are aligned and whether you're actually working towards a common goal. I think just kind of basic good business principles and practices. And I think we've been excited to see that banks, kind of the pendulum swung back kind of a few years ago, where banks were extremely reluctant for a long time to embrace working with fintechs. And we've seen banks much, much more willing all over the world to actually explore it and embrace the new opportunities that they can actually pursue by working collaboratively.
What's the best way to align interests? Because I like what you said there. Is it economic alignment? Is it like SLA, customer service alignment? Like how do you drive a close alignment?
I think it's all of the above. I think you have to understand who owns the customer, who's supporting the customer, what are the minimum expectations for each party in terms of what they're delivering in terms of value and service levels, all of the above.
I think the ultimate customer experience, whether you use the NPS score to kind of understand that creates alignment. We're not in business to just make money. We're in business to serve customers, right? And you don't get to serve customers unless you make them happy and actually deliver value. And so having alignment on a focus on that's why we're in business. And so I think about some of our partnerships, the alignment starts at the top with the strategy. What is the strategy? We're tired. Jamie Dimon said in the annual report, 2 years ago, we're going to reinvent business payments. We're tired of looking at the fact that checks are still the dominant form of payment. And then a year later, we happen to be in the annual report as how we're helping them. But that's the thing, that alignment, that strategic alignment around, hey, this is the opportunity is really important. I'd say the question to kind of ask folks, goes back to my point around, the earlier question around what's hard is, we have auditors. We're regulated by 50 states. We have auditors from the top 5 banks, and we have auditors in our shop most weeks of the year. And so, if you're a bank, that actually should be quite comforting. And I think if you're not familiar with that and not comfortable making that move, so it's a younger startup that's not yet done that, you want to say, look, we're going to we're going to be drilling down. We're going to be making sure that you have all the right protections for your business and for our customers, right? And you got to be comfortable with audits. You got to be comfortable with us spending a bunch of money potentially on compliance and security and risk. And, if you're not, then you're not aligned. Back to the alignment question, right? So I think that, there are lots of questions in a partnership you need to ask, but in relationship to a fintech, that the fact this is money, this is people's money, this is the trust. You got to nail that, and you got to be really adamant, making sure that the other side understands that. Lots of companies I've talked to, they're like, "What's an MTL?" They don't know what MTL is. Really, states care about money movement. I can't just move money. It seems like I should, right? And so that approach isn't going to be great for partnering with banks. It might be great for some other part of your business, but it's not going to be great for the banks.
So there's a theme that I think you all heard both of them talk about, which is the fintech or the service provider having the tighter controls around compliance and audit and regulatory issues. And I think that's very backwards a lot of times to what banks think is going to happen, or what has happened with some other fintechs that haven't made it like you guys have made it. So I think that's a really important learning from today.
Yeah, ultimately, we move $60 billion a year. I'm the one who's at risk. So I better make sure I'm doing a good job, right? My team's at risk, our company's at risk. Same for you guys, Scott, right? So we have an incentive, a natural alignment, again, as to making sure. Now, the banks can tell us all, because they move trillions of dollars. So they can say, oh, when you get at this scale, you're going to need to think about this, and that. That's awesome. That's making me better. It means my customers today are getting all the insights and knowledge of what the banks have already figured out with their concerns, right? So.
I don't think it's a coincidence that the two of us are the ones that are sitting here, and it's not about us, it's about our whole organizations. But, we invest tremendously in doing business in a responsible way. We view our responsibility as delivering an enterprise-grade infrastructure. So we cover 200 countries, but we also cover 150 of those countries where we can settle in 2 or more ways, and actually about 100 of those countries where we can settle in 3 or more ways. And an environment where everybody is trying to race as fast as they can to add the next feature and capability or whatever, there's no extra value we get on day one after we integrate the second or third provider that we're working with in a given market. It doesn't expand our capabilities. It doesn't give us a new, box that we can actually put on a checklist of features and functionality. But it strengthens the infrastructure, and the companies that we work with understand, in many cases explicitly, in other cases based on the relationship that they've had with us implicitly, how seriously we take that responsibility.
Good. Thank you both. We've got a few poll questions that we wanted to throw up there. So we'll start with the first question. So go to your app and you can answer the first question. There's some live scoring here. The first one is around who owns the future of business payments? So banks, platform providers, fintechs, or marketplaces. And we didn't talk much about marketplaces today, but they're in an interesting position in this space. Oh, this is interesting. So, here. So banks started in a strong lead. Marketplaces are coming up. So I think this is an interesting place around where do people position within the value chain. Banks having most of that direct relationship in the B2B space, and marketplace kind of owning a lot of times the commercial transaction space.
And again, look, I think every single transaction that both of our companies are involved with, we work collaboratively with banks.
Mm-hmm. And the accounting software companies.
Yeah.
Right.
And look, in an industry of, I guess, a couple $100 trillion of money moving, I guess if fintechs touch 17% of it, we'll probably be okay. So.
Just off the top of your head.
Exactly.
Great. Let's move to the next question here. The biggest hurdle for change for business in fintech. So fintechs very often don't have access to the rails, the ACH or things. They have to go through a bank to get access. You have incentives that play against change very often with whether it's a commercial card that's paying a rebate back to somebody else, or different incentives that drive certain rails to be preferred. And then terms, and we talked a little bit about checks. Very often there's a float piece to it, or a process piece that falls into the terms as well. But it looks like regulations and licensing. So a big topic, and maybe this is a good spot. I know we're kind of out of time, but where does this go with some of the topics around fintech bank licenses, or you mentioned MTL, money transmitter license? Where do you is that a hurdle that declines, or?
I don't think it declines. I mean, government could rally, but it feels like this is lower on the list for government. So I think the complexity is going to be there. And there's value in the complexity for customers. I mean, there's not value for the companies doing it, but each state has different things they've learned from. And so I kind of feel like we do a better job because they each have their buttons, and same with each bank. Everybody's been caught off guard by something, and so that's what they push on when they do their audits. So for us, there's value, but it's...
So we'll hit the very last question here, and I want to point out, because I'm very proud that we went 30 minutes and didn't say the word blockchain. I think that's something, although it's in the last question. So we'll throw the last question up, and I want to thank both of you guys for joining us today, and I hope everybody got a lot out of this conversation. I know I did. It was great. Thanks.
Thank you. Okay.